Good evening, everybody. Welcome back to the BD Forex YouTube channel. I hope you're all well. It's been quite some time since I've done a video. Catching up with you guys once again. Feels good to be back. And I've kind of jumped on tonight's video or this episode of Sniper Sundays quite last minute. There was a bit of a spare of the moment thing where I actually put the question out to you guys whether you fancy the Sniper Sundays, and I had great feedback. So I actually just jumped on the charts a little bit fresh, so I'm going to go through things as I see them with you. It's actually 11 p.m. at the moment in the UK. So if we just go to here, well, let me just refresh this. This is the Forex Factory, which I'll be going over. It's 11:05 in the UK right now. So yeah, you guys, the feedback was great. So because of all the feedback, I said I'm going to jump on, have a look through, see what we've got ahead in the market, and see what we've got coming for the week ahead. So I put that message out on my Twitter. I've been a little bit quiet on social medias recently, guys, for up until the last couple of weeks where I've been fairly active again. And for any of those who don't know, the BD Forex community actually closed down. This is our website here. We actually closed down about a month ago. Well, not closed down, but we actually paused subscriptions and we paused our regular service to our members while we actually take some time to perform updates and upgrades to the community, which we're going to be releasing soon. So we've been working very, very busy in the background, and therefore we're actually now providing a free reduced service to our community members because we're working so hard in the background. We don't have the full time to give to the community at the moment. So if you guys are interested about that, not meaning to plug it at all, just want to try and explain to you guys what I've been and what we've been up to. But if you do want updates, just drop your email on the website and we're going to be sending updates fairly soon. But as I said, I was pretty quiet on social medias because of working so busy in the background, being sort of really active recently on Twitter especially. Loving it on Twitter, been posting some chart updates. A lot of my new material that is going to be getting released in the community once it reopens. For those who have seen it, you'll know about the intraday. I'm very much about my intraday strategy at the moment, which also turns into swing trades, but very much intraday where you get in and out of a trade within the day and have great results. You can see here a few 20% in 2 days a couple of weeks ago, 5% in a day last week. Posting all winning, all losing trades, very transparent. Everything's going to be completely transparent that I'm showing you on my Twitter and everything. So if you've not been on my Twitter, go and have a follow. It's BDForex_. But yeah, as I said, today was a really good. I just threw it out there. It's been a while. Sniper Sundays, anyone, and I had a great feedback. So even though it's late in the UK, I'm jumping on now. I'm going to go through these trades, showing some crypto, which I'll be looking at in the future. But yeah, just various updates on charts. I'm actually going to look at this one in a minute, but it relates. Don't take any notice of my golf swing there. But yeah, just showing various trades and various trading updates. So if you want any sort of trading related content, go and have a follow. And you'll see me on there. I do obviously post everything on my Instagram, but I've been doing a lot on Twitter at the moment. So as I said, I've been sort of a little bit quiet until the last couple of weeks. Now posting a lot of trading content for you guys throughout there about Sniper Sundays, and now we're going to get into it. There's such a great feedback. Didn't quite expect such great feedback because it's been quite a while since I've done a Sniper Sundays. But if this is something that you guys would like consistently and every week, then I'll do it publicly for you guys as well. So you have, again, like previously, where there'll be a Sniper Sundays video every week or whenever there's an update in the market. So having a look at the market, it seems that we may have picked one of the trickiest weeks to actually analyze the market. I have been basically, as I said, working on the community in the background. So I haven't been paying too much attention to the markets. I've been looking at very intraday levels where me and the community are looking to get in and out of the market very, very quick. So we look at taking an entry with a 10 pip stop loss, 10, 15, 20 pip stop loss. We make 50, 60 pips, 2, 3, 4, 5%, and then we get out. So I haven't really been looking at the market on the whole and looking at a bigger picture. Now, having looked at the market, it's going to be very hard to call a bias 100% like I normally would on a Sniper Sundays. However, grab a notepad, grab a pen, because you may pick up a few little gems, a few little tips and tricks that I'm going to mention. And even though we may not be able to actually call too many trade directions or any trades off the bat today on Sniper Sundays, I may follow it up if you guys like this video and want me to continue. I will follow up during the week if the market gets moving a little bit better, and I can follow that up with more analysis once there's more to feed off. But this video could potentially be a lot more productive for you guys, because I'm going to show you the mindset you need to have and what you need to be thinking at a time like this in the market. So what I mean by a time like this is there's two times in the market, guys. And right now here I've got the US dollar index, the DXY. For those that don't know, the dollar index is the US dollar, the main currency, the world currency, measured against the other main currencies of the world. So basically the DXY, the dollar index, is how you can basically determine the strength of the US dollar. So I always start with this when I'm doing my weekly analysis. But firstly, before I get too far in, I just want to explain that there's two times in the market. You can see that the market trends as it moves down, higher lower lows, higher highs, higher lows, lower lows, lower highs, lower low, lower high, and so on, and until we keep going. Then the market starts to range or move sideways or consolidate. At the moment, the market is consolidating, and as you can see here, the market has been consolidating for about half the month, about 2 to 3 weeks now. So what you need to do as a trader, when you first look at a chart for the week ahead, is understand your surroundings, get your bearings, realize what is going on in the market. You need to look at the market, take the market for what it is. Don't try and enforce your bias. Don't try and enforce a trade on the market. Basically, simply look at the market and say, right, what is going on? Note it down, and then see if a trade comes to you. Don't go looking for a trade. Now, looking at the market here, just instantly I can see, okay, well, this is the daily chart. This is the US dollar. I can see here that we're within a range here. So this is the daily chart. This means we've been within this range for about 2 weeks. So that instantly tells me that the market can be choppy. The market is within a range. It's not really going anywhere at the moment, which also then tells me that it's going to continue to be choppy, and that there's a good chance of some manipulation over the next couple of days or the next couple of weeks. But we're going to get to that in a minute. So as I said, what I want you guys to do from this Sniper Sundays is there's not a lot of trade setups, but I think you can learn from what I'm going to tell you and take you step by step of how we look at the week, what we do on a Sunday evening to look at the market, how we get to that conclusion that we're in a ranging market at the moment, and what we can expect. So first off, as always, I always look at the fundamental calendar and the economic calendar. So many people overlook this. A lot of people are pure technical analysis and they don't look at the fundamentals, but you have to know what fundamentals are coming up ahead. Remember, guys, trading is about risk management. So you're always managing your risk. And you can never manage your risk if you don't know what fundamentals or what news is coming out. You need to know what news is coming out within the next hour, within the next day, and within the next week. So you always need to be looking ahead. So at the moment we're on Sunday. This is at the moment. Now we're looking ahead to Monday. Here, Monday, there's no high impact news on Monday. Fairly just muted news. Nothing that's really going to shake up the market or move it too much. So there's nothing really there to look forward to or worry about, or if you're in a trade worried about that there's news coming out on your currency pair. For instance, if you're in Euro USD and there's US dollar news coming up on Monday, you need to know that because it's going to move the US dollar and could potentially affect your trade. So Monday there's nothing. Tuesday there's nothing really apart from 2:30 a.m. This is UK time. There's some Aussie dollar news that is coming out, a monetary policy meeting that can affect the Aussie dollar. But apart from that, a fairly quiet Tuesday. Wednesday is fairly quiet again. No real high impact news. Only an OPEC meeting, which will of course can affect the price of oil. And then if it affects the price of oil, what else can it affect, guys? the Canadian dollar, because we know that the Canadian dollar is hugely affected by the price of oil. Thursday, there is hardly anything to look forward to. No high impact news coming from America, the UK, Euro, nowhere really. And then we move on to Friday, and then there's a bit of high impact news with manufacturing and services PMI from France and Germany, which will be important for the euro. France, Germany, bigger manufacturing. But apart from that, there's only really two high impact news events this week, which is one on Friday, which is not the biggest, and then one on we got the OPEC meeting on Wednesday and the Australian news on Tuesday. Now remember, guys, this is at the moment. These can always change, so always update and take a look. This is Forex Factory that I use, pretty standard, free website. Just go and have a look, and you always get the economic calendar. So first thing on my checklist as I'm looking at for a trading week is, okay, so now I've checked what fundamentals there are coming out. I can see that there's no real big high impact fundamentals coming out this week. So for a week where we can actually go back to one of the main things that I look at first, which is the US dollar. Why do we look at the US dollar first? Because it affects the market. It affects the whole market. It's the biggest currency of the world. Most currencies are penned against it. Most of the majors are to do with the US dollar. For instance, Euro USD, GBP USD, Aussie Dollar US dollar, pound. I think I said pound US dollar. There's US dollar is predominantly involved in most of the major market moves. So looking at the US dollar index gives us a good insight of what the dollar is going to do. Now, firstly, I can see that there's nothing on the economic calendar that's really going to shake up the market or make it move too much. Then I can look at the US dollar and see, okay, well, we've actually been within a range for the last two weeks. What is going to make that change? At the moment, fundamentally, it doesn't look like there's going to be anything to make that change. Now, when we're in a trend, guys, in order to change trend, we normally need some sort of fundamentals to make the market turn direction or move in the opposite direction. If the market was going to move or change direction on the US dollar, I would have been looking for it to happen last week when we had the non-farm payroll. But the non-farm payroll came out, nothing really happened. Price tried to move up. Any bullish move was short-lived. And we can see here in this daily range, it started to push back down towards the end of the week. So we're still looking at a weak US dollar at the moment. US dollar has been hugely weak over the past couple of months. We just go to the weekly chart here. We can see we broke through monthly support level and we're back down to 92.50, where we're very, very weak, and looks like we could drop down even further. Previous weekly candles, huge wicks to the downside. Looks like price could come down, fill in these wicks, and maybe even push lower. So, as I said, at the moment we can see we're in quite a bit of a range on the daily chart. 4 hour, we can see there's not really too much to feed off when you're looking at the 4 hour chart. I'm just going to take this away at the moment. But what we can see is on the lower time frames, there's a few sort of smaller intraday levels that we can look at here. And what I'm going to be expecting is for the US dollar to definitely push down, break through this level. This level's weak, it's only been tested once. I'm going to be looking for the US dollar to push down into this region, and we're going to be watching how price reacts from this level. We're going to come back to 92.50. I believe we're going to come back down towards this area, back towards 92.50. We're going to be watching how price reacts once it breaks this level of support for the US dollar. I do anticipate to see a little bit more of US dollar weakness, whether we could potentially just pop up slightly just to take out these previous highs, this sort of liquidation zone here, just before pulling back down. However, I do expect to see US dollar weakness and come back into this level. Now, talking about liquidation, something I'm going to just note a little bit about on this video. As I said, this is going to be more educational rather than actual giving trades, because right now on a Sunday evening, where the market's only just opened, and the way the market ended last week, there's not a lot to feed off. Usually on Sniper Sundays, especially with the community, I love giving out, being able to pick out levels, saying that we're going to go up, we're going to move up first, and then we can look for a sell-off, and then we can look for a push down, and then we can look to buy. But it is really, really tricky this week. So what we need is the market to get going and have a little bit of a move, get moving. see if we can break out of the sort of ranges that we're in, and then we can start looking at future trades. So we could be looking at maybe doing another update or another video later this week. But right now, we kind of need to have a bit of patience. And having patience and doing this video and let you know that you're going to need some patience can prevent you from getting into any bad positions or any bad trades, and being able to see the market for what it is, as I said. So basically, we're going to be looking for a push down. I'm expecting price to push down into this liquidation zone. Whether we have this push up or not, I'm definitely expecting price to push down into this area. Push down into here, then we're actually just seeing price come back down to what is the bottom of this range. So we're just going to see price come back down to the bottom of this range, where I'll be looking for price to come back down and more than likely take out the previous lows, and then only on coming down, taking out these previous lows, may there be a reversal back up to the upside. But we'll look at that and cross that bridge at that time and when it comes. But first off, one of the things, guys, you need to understand is before the market is going to change direction, 80–90% of the time it will take out the previous low first. So in order to make that move back up to the upside, what we can expect is price to come down and take out the prior lows, this low, support, come down, take out these prior lows, come into this liquidation zone, and then make a move back up to the upside. So at the moment, I am expecting the US dollar to show some weakness, whether it's straight off at the start of the week. I'm expecting price to come back down, take out this prior low here, and show some weakness and come down into these levels. If we're going to see a reversal, I'm expecting price to then take out these prior lows first. So now that I've looked at that and understood what I can expect on the US dollar, I can now start looking at other US dollar pairs. So now I jump to the US dollar. I've got two charts here, guys, which I'm going to explain in a minute. Firstly, I always have my main chart, which is my chart with my levels, my monthly levels, my key levels. So you can always just look at the chart and understand how price is reacting to certain levels, the key levels that are needed. So you've got monthly support, resistance now turned support. We've got weekly resistance just above at 1.200, that round psychological level. So I always have this chart in the background so that I can see what price is doing or where it's trying to go. At the same time, I also always use a clean chart like this, so I can just look at the price without being interrupted by any levels or anything like that that's gonna throw my eye off. So I like to have a clean chart as well. Now at the moment, what I can see is price is it's already just started opening slightly on market open an hour ago. I'm expecting price to come up into this region here. I'm expecting Euro USD to push up well into the 1.860 to 1.1900 level or region, into this sort of liquidation zone. You can see here that we pushed up here. We made a resistance, one resistance here on Euro USD. Let me just put on a horizontal ray to make it a little bit clearer for you guys. I'm expecting price to push up and tap into this region. I'm expecting to take out this prior high and come up into this level, and only once it gets into that level will I be looking at potentially taking a short trade. Sorry guys, I'm just going to stretch this out and just try and make it as clear as possible. Now I can see that this could be pretty choppy coming into this week. If I just drop down to the 1 hour chart, you can see here we have this minor resistance here as well, where price could potentially find a little bit of resistance, come back down, come into this area of support, retest this level of support, where we have this liquidation zone as well, where we could potentially look for long trades to come back up to the upside, something like this. So basically what I'm looking at the moment, guys, is I'm expecting more upside on Euro USD. I'm expecting US dollar weakness, as I explained with the dollar index chart. We might have a little pullback up initially. We could market open Mondays are always, you can often give a fake sort of view of the market. Mondays are often very manipulative. Mondays have a little bit of a shakeout from Friday's position, so you have a false move on Monday, and often the first move of the day on a Monday is false. But Monday being the first day of the week, often the move is false. and moves in the opposite direction. So we could see a false move up to the upside before seeing a move to the downside on the US dollar. That then can mirror with the with Euro USD. But what I am expecting is that if we were to see a pullback down, I'm expecting Euro USD to have a push back up to the upside and basically take out these prior highs that we've actually got at the moment. I'm expecting to come back up towards the 1.1900 level, and if we can come up here and we do break above this high at the moment of 1.18660, then I'm expecting price to push on and go back up to this round psychological level of 1.200. I do think that we can push up and move into that level. This would be mainly based on a weaker US dollar. But one thing that we have to understand, guys, is if we actually just step back and look at the US dollar on the daily chart, the market's actually been terrible for the last 2.5 weeks. This is the main currency. This is the main traded currency pair in the market, in the Forex market. The most amount of money out of any currency pair in the Forex market moves through Euro USD. It's the most popular, and even with this pair, it's only moved 100 less. The main body of the candles has only moved 135, 150 pips in the last 2.5 weeks, which is really poor. Now we can see here that we've had a trend in market. We've pushed up strong, so we've been very bullish coming into this consolidation zone. So we could expect to break out up to the upside and keep on moving up higher, but we are within this range. And what can we expect when we're in a range, guys? When you see a range like this, before any move or any real move, you can often see fake out or manipulation. So a fake move either to the upside or to the downside. Now currently we do look bullish, as I said, with Euro USD on my other on my second chart. I am expecting price to push up into this region. From these regions, we'll be watching to see if there is a possible short opportunity. But I am looking at price to come in. We might even have a little pullback down, as I said, but I will be watching for price to push back up to this 1.200 level, where from then, we may be seeing a bigger sell-off in the coming weeks from around that level down. We might even push a little bit higher, but from around this region, 1.200, I think we could be having a longer term sell-off. But one thing, as I said, guys, to take into consideration and to understand when you're looking at the week ahead is what's possible. What do you think is possible? Remember what is happening the week before and the week before that. We can see here the last 2 weeks we're stuck within a very tight range on Euro USD. So you have to understand that and make sure you understand that there's a rate that you're actually trading within a range. So then when trading within a range, you need to be very careful. You need to think about where your stop loss placement is. And therefore, as I said, even though I'm not given an actual trade here at the moment, making you be able to understand and identify that you're within a range and that you need to be careful and be more patient before you take a trade, that can prevent you from getting yourself into trouble. So at the moment, I wouldn't be looking at taking a trade. Myself, I do believe that price is going to break higher and come above this area, but I would want to, for risk reward reasons, I'd want to see a pullback down first, maybe take out this low here, come back down, take out this low, and then be looking for somewhere around here for a pushback up to the upside. When we break down here, we could always come down and test the lower ends of this range once again. So at the moment, you can see we're actually trading within a very confined space. But my general bias on this is that I do expect Euro USD to push up higher. I am looking up into these to come back up to around 1.200, and there we could be looking at potential sell-off. But I'm looking for a push up, but we just need the market to get going and really start having a bit of a move and get a bit of a move on before we can start really calling some proper trades. Euro GBP is an interesting one. Why is this interesting? So actually, let me get off this chart again. This is my chart on the left with all my main levels. This is the chart on the right. This is actually a trade that I'm actually in at the moment, guys. And I'm going to explain to you why it's interesting. If I just quickly go back to my Twitter. Sorry, let me just pull back down a little bit. we go to back to my Twitter. I actually posted this on Thursday, I think. So I've been posting this trade since the start. Here you can see that that's the actual trade I'm about to show you now, which is 6%, or just under 6% in profit. I showed it here when it was 4% in profit, and I think I showed it. Yeah, here I showed it here when it was 1% in profit. So as I said, guys, I'm showing everything on Twitter. Wins, losses, break-evens, everything is being shown here. Everything I give to the community for free, I'm also posting here on Twitter. So why this is interesting, Euro GBP, is because I've been updating it along the way. But even though I was 6% in profit here on Friday or Thursday, you can see I was 6% in profit. About a 10 pip stop loss, 6% profit on this trade. Then I just posted here on Thursday, I believe it was. You can see here where market came up towards this resistance, started to pause. I explained my reasons for of holding this trade or believing that we come up into this yellow highlighted zone where I'll be looking for a bigger win on this trade. So first off, we've got here a double bottom daily 4 hour. You can see we've had one support here, 2 support here, so a double bottom, 4 hour and the daily. Here on the daily chart, this area here, this is the 4 hour chart, but if you go to the daily, this was a morning star formation, which is a strong reversal sign. But above here, and I'm going to talk about this a couple of times in this video, and this is something that you can take away and start to practice and use and tell me how you get on. But using the liquidation zones, often you don't need too much on your chart once you start to understand this and understand price moves between levels. Price has to take out certain levels to then move in another direction. So for instance, what I mean here, this yellow zone is a liquidation zone. Why is it liquidation zone? Because we've got a prior high, which is here. So price is trading here. So the prior high is over here. And what is sitting above here? Anybody that's sold here, stop losses are sitting above this high in this liquidation zone. So this is where trades get liquidated when stop losses are hit. So at the moment, price is moving up. I'm about 5, just under 6% profit. And at the moment, I'm holding this trade, expecting it to pop into this liquidation zone. So then what happened on Friday? Friday, we had a big pull down. But I held this trade. I'm still holding this trade. Now, this is why it's interesting, because I want to give you guys an understanding of what I'm thinking and why. Now, I'm going to talk about this in this video and in future videos. So I'm going to make you understand and learn about liquidation and how you can understand where price is going to go and why it's going to go there. Now, as I said, if price is going to sell off, guys, sorry, let me just get rid of that. If price is going to sell off from here, you can see here we've got a simple sort of range that we're stuck in here. Support, resistance, support, came back up, came back down, support, resistance. We're within a range here. You can just highlight it, easy to understand. We are now within a range. In order for price to sell off, we're going to have to take out this high. Price is going to come up, take out that prior high, and then sell off, if any sell off. At the moment, I actually think that Euro GBP, I think, can actually come up higher. It can come up to around 0.9100, which is up here, and maybe even higher. But there is a liquidation zone sitting above this price here. Now, when I showed you that video on, when I showed you that picture on Instagram on Thursday, I'm expecting price. I'm happy to hold this trade. It's looking for price to come into this yellow highlighted zone here. Now, if I drop it back to this chart, you can see here on Friday. On Friday, we had a big drop. So I was 5.4 or 6% up. Once I get the exact stop loss there, I think this is pretty correct. But I was at 5.6, nearly 6% profit, and then it came all the way back down, and I was 1.2% up. Now, for me, that's fine because we had a 10% plus week last week, and we had 20% the week before. Normally, I'd take a little bit more. I might take a little bit of profit, but I'm fairly confident in this moving forward and moving up higher. And now I'm going to show you why. So, understanding that price needs to come out and take out this prior high before making a sell-off, if any. What has happened here on Friday? I'm just going to move this out of the way for the moment. I hope you guys are following me. When I posted this video, when I posted the photo, sorry, when I posted this photo here. Price was here. Now, as I've highlighted this whole area being within a range, and that price needs to come up and take out this liquidation zone before moving down lower. The same thing is happening here on the lower time frame. Now I'm going to mention this on higher time frames, lower time frames, and once you see it a couple of times today, something might click, and then I'm going to talk about it in videos in the future. But this pullback down here, below this range was into this liquidation zone. So normally what I do, guys, is I have these levels marked out in blue, and then I have liquidation zones marked out in yellow like this. So I know that price is going to push down into this zone because it needs this liquidation in order to push back up to the upside. So when we were trading within this range here, we were bouncing around, price didn't know which way it wants to go. It needs to find the liquidation, it needs to find the momentum to help continue pushing in the direction it needs to go into. So for price to continue pushing up into this direction, it needs to find that liquidation, take that money from down here before moving back up to the upside. So I said, normally I have my levels marked out in blue here, support and resistance, as you can see. So then what's happened here on Friday is prices dropped down into this liquidation zone, taken any trades. Anyone who went long here with a stop loss here has been liquidated and that position taken out. And then anybody with this big bearish candle here, 95% of retail traders would have sold on this bearish candle here, or on the way down, thinking it was very, very bearish, and their stop losses will now be set above here in this original liquidation zone which I mentioned. So price dropped down into this zone and pulled all the way back up again. Manipulation on the 4-hour chart. Daily, you can see here, spiked down and pulled all the way back up again. Now, from that level that I've marked out, you can see the market has just opened up this morning, this evening, and it actually reacted off that level once again. It's now pushed off this, and I expect it to come into this zone. I'm still holding this trade, and I'm expecting it to come into this level at least, and I'm actually expecting to push up even higher. My next level on my monthly chart with all my key levels is my monthly resistance with 0.9100. So if we break above here, and we do manage to break above this level here, I'm expecting price to push up towards this level before potentially looking for a sell-off coming into the coming weeks. So I'm looking for a push up towards the 0.9100 level at the moment on Euro GBP. Hopefully that makes sense, guys. As I said, my charts are pretty fresh. I haven't been able to clean them up, as in make them everything on point, because I literally did just jump on the charts this afternoon or tonight once I had all that feedback from you guys and said it's now 20 to 12 in the UK time. So at the moment, Euro GBP, I'm expecting this to push up to the upside and continue this move up higher. Now, just while we're on this chart, you can just see I mentioned that what I've been basically working on and given to the community for free has been intraday trades. And that's why I haven't really been paying too much attention to the market. I've been giving trades each day to the community. And let me just clean this up. Where we've been getting in and out of the market quite fast and making really, really nice profit. So this was the entry that I gave to the community. It was actually a lot sloppier than most of our other trades. I say sloppy, you can see here, because we had a little bit of drawdown. Now, the stop loss on this entry, on this trade, was 12 pips. The drawdown was pretty close. It's about 9-10 pips. We came down, we placed a buy order here. Price came in, triggered, went into a little bit of drawdown, into profit, came back down, into profit, and then reacted off my level nicely twice here, and then we pushed up, and we've been making a nice profit ever since. And it's been a nice sort of 5.5% to 1% risk maximum, 1% of your account only to make 5% in one trade. So this is the trade that we've had on Euro GBP holding since last week. Again, I'm predominantly trading intraday at the moment, and I think that moving forward over the next couple of weeks, we should also be trading intraday because the market is very, very choppy at the moment. I just really want to go back to Euro USD, and what I mean by choppy is that we can see that the market is ranging here. I'm getting bored of saying the word ranging, but you can see what I mean. And there's a reason for that, guys. So let's have a think about why could the market be ranging. Now, one of the reasons why is that we are smack bang in the middle of August. August is, of course, in the middle of the summer months, the holiday months, and always, nearly every year, you'll find that in August, the trading volume or the volatility slows down in August because it's, as I said, it's the holiday month. Remember, the human factor is a big part when it comes into trading. Obviously, if you think Christmas time, holiday season, the market gets quiet. August, when it's a holiday season, the market gets quiet because there's not as many people trading. Hedge funds aren't trading, could be on holiday. Banks may not be trading as much. So there's usually a little bit less volatility in the market. So the market can get quiet in August. Obviously, there is still movement. It's not quite like certain times in the year, maybe like bank holidays or, as I said, at Christmas, but there will be a reduced volatility at that time of the year. Now, the last 2 weeks, the 2 weeks in August have been ranging. We could potentially see another 2 weeks of ranging throughout August, especially when there's no fundamentals to shake up the market or get the market to move. So don't expect big moves in the next couple of weeks. Understand that if you get into a trade, you might want to take some profit, but the market could continue to be choppy like this on US dollar pairs and on the whole market, on the market as a whole, as you see here with the US dollar. Just quickly put that back so you can see the range. Hope this all makes sense, guys. As I said, I've literally just jumped on, but what if the market gets moving this week, I can jump on another chart, another video later this week. So that's Euro GBP. GBP USD. So something I'm talking about, the liquidation zones or liquidation areas. Something that I was looking at last week, and a trade that could have been a little trick where you can look for taking trades, guys, is GBP USD here. GBP USD. So let's take away this zone for the moment. GBP USD last week on Friday made a run up to these highs here. Now remember, as I just said, 80-90% of the time, if the market is going to reverse, it's going to take out the prior high before it makes that move. So it's going to take out the prior high, it's going to take out stop losses, it's going to take out that liquidation, and then it's going to make a move in the right direction. Now, Euro GBP and GBP USD obviously have the pound factor, the GBP factor. I'm going to just clean this up a little bit here. What we can see here with the pound is that the pound got strong on Friday, had this big sell-off on Euro GBP, had a sell-off, which means the pound getting strong, and then the pound got weak again. I explained this on Thursday on Twitter that I was expecting price to go higher, so any pullback you could look for a long trade. Where could you look for taking a long trade on Euro GBP? Well, if you cross-referencing is something else that is hugely overlooked in trading. People don't cross-reference currency pairs with other currency pairs before taking a trade. For instance, what do I mean by that? If you're taking a trade on a pound pair, you need to be checking other pound pairs before you place a trade. So if you're taking a long trade on Euro GBP, you need to be looking at GBP USD. You need to be looking at GBP JPY to understand how the pound is performing. So you always need to be looking at different pairs before taking a trade. Now, GBP USD, at the same time as Euro GBP making this push down here on Friday, pound was also making a push up here on Friday. Now, I didn't take this trade because it was Friday and I had enough trades for the week already. I had made great profit. But here is where you could have been looking at taking a short trade on pound, and where you could have been looking at taking a long trade on Euro GBP, especially given the fact that I had explained I'm expecting this pair to go higher. Now, why is that? Why would you be looking for a trade here? Well, you can see here we've had a run up to the highs on GBP USD, and quite simply, what has GBP USD done here? It's taken out the previous highs. It's taken out this high. It's taken out the previous high over here. where more liquidation would be held above this area. So you can see here this liquidation zone, we've come up, we've tapped into this level, and then we've had a sharp sell-off on Friday. Now I'm expecting some more downside on GBP USD this week, but again, let's not get away, and let's not get away from the fact that if we just look at this pair on a daily, GBP USD on the daily, yes, we've had a very bullish run here, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days we've been stuck within this range. Let's measure this range, 150 pips. That's very, very bad for the Forex market. That one of the second biggest currency pair is stuck within 100 to 150 pip range. So understanding that, again, this is why taking this on board may actually pay you more than actually me giving you a trade this week, because understanding these things and noting them down and understanding what you need to be looking at in the market may pay you dividends in the years to come. Because looking at this, you need to understand, okay, well, look at the daily chart, guys. It's an absolute mess. All of these days is a mess. Doji candle, couple of bullish days, bearish engulfing, shooting star, doji, shooting star, doji. It's an absolute mess. So what can you expect tomorrow, especially on a Monday? Do you expect that you're gonna place a long trade and it's gonna fly 100 pips, or you're gonna have a sell trade and it's gonna dump 100, 200 pips? I don't think so, especially on a Monday in the market. So you need to take the market for what it is, and don't try and put your impression of what you want the market to do. Understand that the market is not a very good market right now, and let the market come to you. Now, I do think that we can see a sell-off. Let's see, do I have on my other chart? I do think that we can see a little bit of a sell-off on the pound pairs this week. I'll just go to the 4-hour chart. This is on my clean chart here. We've had a fake out to the upside here of this triangle formation. A little bit of a triangle formation forming here. It's quite choppy. I do think we can see some downside, because we can see Euro GBP. I'm expecting some upside. I'm expecting pound to come down and potentially come down to take out these lows down here, to come back down to around 1.300. Might have a little bit of playing around to start the week off, as I said, because it is quite choppy. But I am expecting to potentially see a break of this counter trend line here, and to see the pound pairs pull back down into around, well, a pound USD pull back down into around 1.300, and potentially take out the prior low here over here at 1.2980. So I'm looking for a little bit of a sell-off on pound this week. You can see here we're having a little pull up just on the market open, where we may pull back up sort of this head and shoulders formation. Left shoulder, head, might pull back up, form a right shoulder, and then pull back down. And then we could look at a pullback down, as I said, into 1.300 and maybe a little bit lower. So you're looking at about 100 pips, or just over 100 pips. But then from there, overall, I'm still bullish on pound. So even though I'm looking at a potential short trade at the moment, overall, I'm still quite bullish on pound. If I just quickly go back to my other chart, I've been quite bullish on pound since this move back down here. I'm actually going to go to this chart, guys. I'm sorry if this is a little bit choppy. As I said, it is just last minute that I've jumped onto this Sniper Sunday tonight. But I will do a more cleaner and updated version either during the week or next Sunday, if you let me know your feedback. So back here, guys, this is quite some time ago. This is on the weekly chart. In the community, once we push down through here, this was when the pound made all-time lows. And I was actually looking for longs from this level. The reason being, it seems crazy at the time. At this time, I even mentioned in the videos to our community that in a couple of months from time, we're going to be so far away from this point, we're going to think, why did I not buy it down at these levels? Now, what prop price does here is it brings fear into the market, and it's liquidation. It comes down. There's so much liquidation below these two levels here. These are all-time lows. It came down into this liquidation zone, and then it's reversed and sprung back up to the upside. And we've been pushing up. We've been very, very, very bullish ever since. And I've been looking for price to come back up all the way above these levels, to come back up to 1.3500. The video that I actually made on this was back in March. and we're nearly there already. But at the moment, I think we could potentially see a very minor pullback. So I am still bullish on pound overall, but I'm looking for pound to make a little bit of a pullback. But this pullback, you can see, is so minor because if we actually just stretch this out, we're stuck within this range. So what we're basically looking at is pound to potentially come back down, retest the bottom of this range, retest this prior low, take out this low, but by taking out this low is dropping into this liquidation zone. I'm just going to leave this as a range for the moment. So I'm looking for price to push back down, and from here I think we can then see a bigger push to the upside. Go back to Euro GBP. Longer term, if we can pop back up to 0.9100, we may even come up a little bit higher than that. I am looking for a longer term sell-off on Euro GBP. I believe that we can see a longer term sell-off. If we push back up to this, if we push back up to these regions here, I think we can see a sell-off where we can be looking for a longer. Then we could see a swing term sell, but we could pop up. We could pop up a little bit higher, 0.9100, 0.9150. So I'm looking to hold this trade to move back up into these regions where we can be looking for a sell-off for a longer term swing. GBP JPY looking like we're finding some resistance at the monthly. What's that spelled? That's spelled wrong. It's going to annoy me, so I'm just going to do that now, guys. Okay, it's not allowing me to do that. But yeah, monthly resistance here. We're finding some resistance. This is an important level coming into this week on GBP JPY. This is creating a new lower low on this new trend that's trying to move down here on the 4-hour. We come up here, we've made a monthly resistance at 1.400. We've rejected, we pull back down, we come back up, we're finding resistance here once again. We've had a nice tweezer top formation, double tweezer top formation, bearish engulfing. Now, if price can come back down, so we made a lower low here. We've made a lower low here, a lower high. If we can break below here and have a strong close below here, a close below here, then on a pullback, I'll be looking to short GBP JPY and look for a move down on GBP JPY. Just as I said with GBP USD, similar situation. I'm looking for a downside on GBP pairs early in the week. So I'll be looking for a pushback down, where we could come back down anywhere down to below, back towards 13750 to 13780. We could come back down to these levels, have a spike back down into this sort of liquidation zone before making another move back up to the upside, where I think we could potentially see even more upside with GBP JPY. But I'm looking for a potential little sell-off at the start of the week. But I will keep an eye on this one. We'll keep an eye on pound pairs. See if we have this sell-off, if there is going to be any sort of, once we have a bit of a sell-off, where we could be looking at long trades. So that's where I might update with a video later this week. 48 minutes into this video, time flies. USD CAD, I'm going to just fly through the last few ones, guys. As I said, I'll do a video once the market gets a bit moving later this week. You guys give me some feedback. If you're liking this video, I know it's been a long time since the last one, but I will jump on and sort of give some more updates during the week if the market gets moving and we can see a little bit more movement in on some of these pairs. Now, USD CAD, I'm just going to go to a clear chart here of USD CAD. Only been looking at sells on USD CAD for the last couple of weeks. Here we can see long-term daily trend line. Price is still beneath it. Very, very simple. Just to look at, just to visually get you to understand what direction the market's moving in. Drop down to the 4-hour. As I said, I've only been looking at sells in USD CAD for the last couple of weeks. We do have the OPEC meeting, which is going to affect the price of oil, which can affect USD CAD this week. So we need to be careful on that. But I do believe that there can still be more downside on USD CAD at the moment. We've on the daily, we've shown a daily bullish engulfing here. As you can see, first sort of sign of life to try and push back up. We've had a level of support, then daily morning star formation here. So price is going to try and push back up early in the week. But I think we're going to see it short-lived. And what I'm actually going to look for is potential short trades on USD CAD. And we'll just clear this all off and explain why. At the moment, we've got this level of resistance from last Friday. I'm expecting price at the moment to make an early move up here to try and break through this. From this area here, I'm going to be looking at short trades back down. Whether this is going to be short-lived and we only come back down towards this sort of region back here where we could be potentially looking for a reversal back up. I do believe that regardless, we're going to see a push up here, break above 1.3, let me just mark this out, 1.3270 to 1.32 sort of 80-ish, 90. I think we're going to push up into this sort of region here where we could be looking at a sell-off and coming back down. Now I'll be looking for the sell because or the short trade because you can see here that we are in a very much in a downtrend. You can see here lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So we're looking at a swing lower high to come back down, looking at potential trades here where we could sell off and come back down and maybe take out the prior lows and keep pushing down lower. Now at the moment, it's very much dependent on the US dollar. And as I said, the US dollar is stuck within a range, so it is very hard to basically call which way that's going to go at the moment. But the short trade here goes in line with the overall trend. So therefore, we've got the momentum behind us. We've got the trend behind us. You can see here we're coming into potential third touch of this trend line here. We could be looking for a push back down. And then if it starts to fizzle out and we start to see some bullishness come in here, we can hedge a trade back up and trade it back up. And we could potentially look for a nice short trade back into the lows here of USD CAD. Now on the flip side of that, well, just before I get into that, remember guys, USD CAD is highly influenced by US oil, by the price of oil. We're going to get to that in a minute. But actually, I'll just jump onto oil now quickly. Remember, oil, there's an OPEC meeting this week. And we'll very quickly jump to the oil chart. Again, I've just simply highlighted what the last couple of weeks has been doing in oil and how choppy it's been. 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's say the last 9 days of oil has been stuck within 100 and 150 pips, which isn't much for a very fast moving, a very fast paced commodity. Now, that's the range. I actually think that oil can push up a little bit higher. I think we've got this liquidation zone here sitting above here. So if oil's going to sell off, I would be expecting to see oil push up into this region and then see a sell off. But we're going to need to watch price once it gets up into this region. We are starting to form a bit of a triangle formation, which I would expect when there's news coming. So you can see here. One tip to take, guys, is that price loves to have a fake out of a triangle formation. When you see a triangle formation form, price will very rarely break out and go in a direction on the first breakout. There'll be multiple fake outs to grab liquidity on both sides of the market. So here you can see this was when the triangle first formed with these 2 points, point 1, point 2, point 1 and point 2. When price came up, had a fake out here and then moved back down to the downside. But once it makes a fake out, you can adjust the trend line as such, and you can see once it readjusted that, it came back up, tapped it, and then made a move back down to the downside. Here we had a fake out. Remember, this is the 4 hour, so drop down to the 1 hour. Makes it a little bit more clearer. Here we've had a fake out here. You can see in the 1 hour how we had a fake out, another fake out on the triangle. Then you can adjust the trend line as such, and then price is pushed up, came back down, retested this trend line again. We could look for a buy opportunity. Now, the price looks like it's going to come back up to test the price looks like it's going to come back up and test the top of this triangle formation again. But as it comes to the top of this triangle formation, I would be looking at price to come back up and try and take out the prior highs and tap into this liquidation zone before a sell-off, if any. So at the moment, you can see here, just quite simply from the 1 hour chart, that oil is pretty unpredictable right now, especially when we've got the OPEC meeting ahead. We may have lots of intraday trades this week, guys. So please follow me on my Twitter, because I'm going to be posting intraday trades here, and also on my Instagram. But I'm doing a lot of trading material on Twitter because it's a lot more clearer and you can explain a lot easier. So I will be posting intraday trades there. And so we could be taking intraday trades on oil could be taking intraday trades on all the pairs that I'm talking about. But what I'm saying today is it's very hard to try and sit here on a Sunday evening when the market is currently ranging and try and call out lots of different levels. So being able to understand that and just simply saying, okay, I'm going to have to wait another couple of days. I'm going to let the market move, let the market start to move, and let the market come to me. Not to be eager, not to be sitting in front of your screen on a Sunday when the market's just opened and trying to press that buy or sell button, trying to get into a trade straight away, and then getting yourself into trouble or getting yourself into losses just as the week starts. Sit back, relax. The market is ranging. The market's not in good conditions. There may be intraday opportunities. Look for the smaller intraday opportunities for the start of this week, and specifically, and possibly the whole week. I will be posting intraday opportunities this week on my Twitter and in my community. But there's certainly I can't see any real big swing opportunities happening in the next couple of days. So here we can see here on oil, as I said, you can see here simply 1 hour triangle formation. We expect price to come back up and tap the upside of this triangle formation once again. We've had various tests of this triangle formation. Expect it to come up here. We could easily see a spike up into this region on the OPEC meeting, and we could see a sell-off from these regions. So whatever happens on oil is going to be very, very important on what happens with USD CAD moving forward. CAD sells off. If US oil gets stronger, then the Canadian dollar will get stronger. If oil sells off, then USD CAD is going to see a push up. So therefore, it's all about what's going to be happening around these areas over the next couple of days. So as I said, on the flip side of USD CAD, guys, is what? Aussie dollar, US dollar. Aussie dollar, US dollar has inverse correlation with USD CAD. So I've just seen here I've just show you here on Aussie dollar, US dollar. I've got a little trade here. So as I said, everything is transparent on my Twitter. I show any wins, any losses. Last week I took 4 trades. We made over 10% on 4 trades. We had 3 winning trades, 1 loss. This was the loss. We had a buy order. Was in a little bit of profit, but this one just lost. Some trades lose, guys. Risk reward. We understand that every trade is going to lose some trades. We just actually go back to the pound. We go back to the pound chart here. Just drop down to the 15-minute chart. So this is very untidy, guys, because I did literally just jump on this very last minute. This was the pound trade that we had last week. So see this entry, guys, on that wick. What I do with the intraday levels is I give you levels to place orders. Market comes and hits these levels and triggers our entries. No emotion, no stress. We have an entry level which is given, and we have a stop loss level which is given. See, stop loss of 12 pips. Here, the market triggered our entry here. We had a drawdown of 3 pips. So bringing into consideration the spread of the pair, we probably only had about 1 pip drawdown. So we barely went into negative. Price came down, entered the trade, and ran straight into 3-4% profit. So that was, you can see risk reward. You can lose 1% here, 1% of your account. You only ever risk 1%. You can lose 1% here. But on the other trade, you make 3% or 4%. And as I said, you can see here on Euro GBP, we're currently up 5%. And then there was Euro USD, there was a trade that we made 2%, and so on. So Aussie dollar, US dollar, as I said, another pair. It's a US dollar pair, guys. It's another pair that looks very, very hard to basically call right now. Let's go to the daily chart. You can see here, this looks really, really sort of choppy again. Let's just really zoom in here on the daily chart and just look at the previous 4 or 5 daily candles. 1, 2, 3, 4, 5. Australian dollar, US dollar is one of the major pairs, guys. And here we can see that in the last 5 days, it moved 50 pips. So you can see here the volume's gone. The volatility is gone. Within the last 5 days, one of the most traded, not one of the most traded, but one of the majors, guys, one of the major currency pairs has actually moved only 50 pips in 5 days. All of last week, it only moved 50 pips. At the moment, before market open, I'm looking for price to come back up and push into this region here. At the moment, you can already see it's starting to have a little bit of a move up. But with the US dollar weakness, if we continue to see the US dollar weakness, I can still see Aussie dollar, US dollar potentially moving up even higher, and basically taking out these prior highs and trying to push on to the highs above. But once again, there's not really too much to call right now. We're going to need to basically update later in the week. It's very, very choppy. I would advise you guys to sort of take a step back, be a little bit patient, and let the market come to us. I do believe that we're gonna push up into this region. Only from there would I potentially look at taking a short trade if we saw very, very strong resistance from here. But at the moment, guys, the US dollar does look weak. We look like we could sell off, and if the US dollar sells off, we're going to see Aussie dollar, US dollar push up and take out prior highs. We're going to see Euro USD push up, take out these prior highs, and various other pairs as well. And US dollar weakness would then obviously see pairs like USD CAD push down as well. So at the moment, that's really all we can really look at, guys. Is a fairly dead market. I was quite surprised looking at it, wanted to do a Sniper Sundays, having a look and seeing that the market wasn't in the greatest sort of position for me to be able to give you out lots of trades. But potentially next Sniper Sundays, if you guys want one. But as I said, hopefully if we have a more active market by Tuesday or Wednesday, I'll be able to update and start giving you guys some levels to look out for, or where to look for price, to look to buy or sell. But at the moment, you've got to understand that the market is fairly quiet. It's August. We're in a ranging market. There's no fundamentals coming this week, so be careful with your trades, and just understand your environment and what the environment that you're trading in currently is. Apart from that, that's about it, guys. As I said, I'll be posting more of my stuff on Twitter, so I'll be posting lots of things like here, just little hints and tips, explaining about liquidation zones. There's just various other little things that I've been posting as well. Here was, as I said, the update of all the trades. Trade 1, 4%, trade 2, 2.5%, trade 3, 1%, which is now 6%, and trade 4, which is -1. So that was at that point plus 5%, but that's now plus 10% for the week. So I do full breakdown on each trade, guys. So if you want to see plenty more, have a look. There's lots of other stuff, a lot of mindset stuff that I'm dropping on there as well. So yeah, please take a look. Hopefully you enjoyed that Sniper Sundays. Let me know your feedback, and I said I can jump on later in the week and definitely next Sunday. And hopefully the market is in a better position to really break down and give you guys a bit more levels, as I said, to take actual trades from. But hopefully this week you can take the good from it and understand, okay, remember, not every week is going to be a week full of trades. Some weeks there's going to be trades, or there's not going to be trades, or there's not going to be loads of setups on a Sunday. So you need to try and have the right mindset on how you look at the market when that happens. Remember, it's not always great of what you see on the internet, on Instagram and Twitter, where there's hundreds of setups every day. Sometimes there's not. You have to be realistic. So today's episode kind of just shows that there's not loads of setups at the moment, but a lot can change in a day, and maybe by Monday, Tuesday, all these other trades kind of come to us. We see lots of situations where we might see price take out the prior highs, and then we can look at taking a short, for instance. But at the moment, we're right bang in the middle of ranges, and there's not really much there for us. So we're going to be patient, hopefully see something in the next few days, and then we can update. Hope you enjoyed that, guys. Good to be back, and I'll speak to you soon. Thank you.